Thank you for joining us at the 2021 Spring Meetings Governor's Talk, and a very warm welcome to all of you. It is an honor and a great privilege for me to introduce Governor Sethaput. Greetings to you, Governor. Let me briefly introduce our guest. Governor Sethaput has been the governor of the Bank of Thailand since October 2020. He is also a board member for the National Economic and Social Development Council, the Securities and Exchange Commission, and the Insurance Commission. Governor Sethaput has extensive experience in economics, policy, and financial markets. He has held senior positions with the Siam Commercial Bank Group, the Stock Exchange of Thailand, and the Ministry of Finance, and has served on the board of directors of several corporations, and also at the Bank of Thailand, where he was on the Monetary Policy Committee. Prior to returning to Thailand, he was with the World Bank in Washington, D.C., and received his PhD in economics from Yale University. We are very fortunate to have Governor Sethaput join us today to share his thoughts on several important issues, including on the setting of monetary policies for emerging markets in an environment of high uncertainty, the appropriate policy mix between monetary and fiscal policy to address the pandemic crisis, and the role of the digital economy in adjusting to the post-pandemic future. The Bank of Thailand has been at the forefront of many of these issues, and we are delighted to have the governor here to share his insights. So, Governor, perhaps we can start on the topic of monetary policy. COVID-19 has created unprecedented challenges for emerging economies, many of which are facing the pandemic with limited policy space, global spillovers, and their own vulnerabilities. What has been the experience of the Bank of Thailand so far in addressing this pandemic? And looking ahead, given the high uncertainty surrounding the outlook, how should emerging market central banks prepare to respond to these challenges?
Thank you, Director Ken. It's a great pleasure to be here, and thank you for having me. I guess my first response would be that it's been a challenging experience. I think, like with many central banks, this crisis is unlike other kinds of crises for which we have a standard playbook and response when we run into a banking crisis or balance of payments crisis. This is something quite new, and it's a kind of crisis that hit us particularly hard because we're an economy, as you know, that's highly dependent upon tourism. We have about 11–12% of our GDP is based upon tourism, foreign tourists, and those have basically disappeared. And even more importantly, tourists account for close to 20% of employment. So we've been hit very hard. If you ask in terms of our response, what we've been doing, I think the main takeaway for us is that our response has had to, by necessity, evolve. Our initial take on the crisis was that it was going to be something that was fairly severe, but hopefully not that long. And so initially, the kind of responses we put in place were measures that were very broad, fairly kind of blanket type measures, broad debt moratorium type measures. But as we've seen, as the crisis has progressed, we've seen that the crisis now it's something that's for us is going to be quite long, taking us a fair bit of time to recover, and very importantly, that it's very, very uneven. For us, the reason that it's taking a long time to recover again, and perhaps longer than in other countries, is because our economy is, again, highly dependent upon tourism. But the unevenness also reflects quite strongly as well. We've seen, for example, that certain sectors, those in manufacturing, for example, or related to exports, have recovered quite well. And a lot of the indicators in those sectors have tracked close to what they were pre-COVID. By contrast, again, those in the service sector still significantly below pre-COVID levels, especially, again, with tourism. And if we look at our forecast, while we believe that we should be back to pre-crisis GDP levels overall at about by third quarter of next year, in the tourism space, where we used to get 40 million tourists a year, we're looking at a much longer horizon, something on the order of closer to 4 years until we're back to those kinds of levels. So that nature of the recovery, that it's been slower and highly uneven has conditioned our response, making our response go from, again, something that was fairly broad to measures that are much more targeted in nature. So we've had to look a lot at credit measures in particular that have been much more targeted in nature, given the uneven nature of the recovery that we've been experiencing thus far.
Thank you, Governor. You point out that this shock in particular has been unprecedented and the recovery so far uneven. In that regard, some emerging markets have resorted to so-called unconventional monetary policies, similar to what the advanced economies have done. For emerging markets in particular, under what conditions and how could they be used? And can you share some of your perspectives from Thailand?
Sure thing. For us, our standard party line on this is that all reasonable policy options are on the table, including some of the unconventional ones used by some of the advanced economies. But that at this juncture, we don't see the immediate need for unconventional monetary policies along the lines of quantitative easing or yield curve control type measures. What we've done thus far is again undertaken monetary policy easing. We've lowered the policy rate. Now it's down to 0.5%. We've focused a lot again on credit type measures to make sure that credit goes to where it's needed. Part of the reason that we don't see such a need at present for unconventional monetary policies along the lines of quantitative easing is because if you look at the aggregate liquidity in Thailand, all the usual measures one might want to look at, loan to deposit ratios, high quality liquid assets in the banking sector and whatnot. In aggregate terms, there's ample liquidity in the system. The issue is the liquidity that is there is not going to where we would like it to go, notably to the small to medium enterprises. If you look, for example, at overall credit growth in Thailand, it's still trending positive. If you look at credit growth to large corporates in Thailand, it's been growing at over 10% year on year. Even credit to the retail sector, household sector, has been growing at about close to 4%. But if you look at credit growth to SMEs, small to medium enterprises, that's actually been shrinking. And the issue there is really about credit risk. So again, undertaking quantitative easing or those kinds of measures which would increase aggregate liquidity wouldn't necessarily translate into increased credit to that segment of the economy, which is what we're most concerned with. So the measures that we've been focusing on to try to address that shortcoming, fill in the gap, so to speak, are issues of addressing credit risk. So we've worked closely with the Ministry of Finance to put in place credit guarantee schemes and soft loans or subsidized lending from the Bank of Thailand to support lending to small to medium enterprises to address that gap, because that's where, again, we feel that the shortcoming in the credit market is.
And Governor, you highlight the importance and the need to target policies to small and medium-sized enterprises. And of course, monetary policy is not alone. And it's very important to have the appropriate policy mix and not to overburden any single policy instrument in tackling this crisis. How do you see the scope for coordinating monetary and fiscal policy? And what are some of the advantages, but also the unintended consequences such coordination could have, particularly for emerging markets?
I guess the first point to mention on this regard would be that we still see that in terms of the mix between fiscal and monetary policy, that fiscal policy really needs to be at the center of the response, and the reason for that is multifold. First off, again, given the uneven nature of the recovery, we've seen certain segments of the economy get hit very hard. I mentioned again the small to medium enterprise sector, but if you look again from the household sector, again, given the fact that 20% of the employment is accounted for by foreign tourists, which have all gone, a lot of households are suffering big income losses. And we have also another feature of the Thai economy, which is quite striking, is the high degree of informal sector employment. So people that are not monthly wage workers, but daily wage workers. So that they don't have the option like white collar workers do of working from home and whatnot. So they've been hit very, very hard during this crisis. And so there's a strong need for income support. And again, the fiscal measures are probably a much better way of addressing that. We've had, even going into the crisis, a problem with high levels of household debt. So providing, more credit isn't necessarily the best response to the crisis in that regard. We've also seen that, as I mentioned earlier, our policy rate now is at 0.5%, which is pretty much as low as it's ever been. So we have fairly limited policy space on the monetary front, and as rates have gone close to that, near or close to approaching that effective lower bound, the effectiveness of monetary policy and the transmission of monetary policy isn't as much as perhaps we would like to see. And so again, that's yet another reason why we feel that fiscal policy in this context should take center stage. That's not to say, again, of course, that monetary policy does not have a role, and we do what we can to ensure that monetary policy and financial conditions overall remain accommodative and supportive of the recovery and not an obstacle to the recovery of the economy. And aside from the monetary policies, the other thing that again is very important for us in the context that we're facing here in Thailand are issues relating to on the credit side and financial policies as well. So undertaking the right kinds of forbearance type measures, regulatory forbearance type measures to help ensure that the banking sector doesn't excessively tighten and that credit is still being extended and that banks are able to play that shock absorber role that we would like them to play and not amplify the shocks by excessively tightening on the credit side and exacerbating the downturn. So again, monetary policy clearly has a role to play, but again, I think the centrality still needs to be on the fiscal front. In terms of coordination, again, I get back to what we were talking about initially about the link between or the scope of collaboration or coordination between monetary and fiscal policies. We haven't again seen the need for us to undertake things like quantitative easing or even measures like yield curve control yet in the current context. Again, part of the reason for that, aside from what I had mentioned earlier about aggregate liquidity being sufficient in the economy, is that we feel that measures like quantitative easing or yield curve control in the context like Thailand, and I think other emerging markets might be in a similar situation, is we're still a heavily banking intermediate market. The bond market, in terms of the transmission effects through to the real economy, is not as substantial as it would be in an advanced economy. So the need for us, for example, to undertake, I guess you call it what's one form of coordination, quantitative easing measures or yield curve control measures to try to be even more supportive of fiscal policies, we don't see that need yet at present. What we have been doing in coordination with the Ministry of Finance is coordinating our bond issuance. Obviously, as a result of the crisis and the centrality of the fiscal response, the Ministry of Finance has had to issue a lot of bonds. The Bank of Thailand also has been issuing bonds as a result of sterilization measures that we undertake when we engage in foreign exchange interventions. But what we've done is coordinate the bond issuance so that we don't issue bonds at the same time, at the same tenure as the Ministry of Finance. So that kind of coordination we have been doing and continue to do, so that's the kind of coordination that we in the Ministry of Finance have been taken. In terms of the latter part of your question about maybe what we see as some of the unintended consequences of monetary and fiscal policy coordination, I think there's a balance that needs to be struck. Coordination is obviously a good thing, but again, if there's too much coordination, one can see that as being, how shall I put it, perhaps undermining the independence of the central bank, independence of monetary policy, where a lot of the monetary policy decisions they're seen to be undertaken largely to support fiscal policy, then I think obviously that has negative and undesirable consequences.
I guess also Thailand has been blessed with very strong initial conditions and a robust fiscal and monetary policy framework, which have allowed you to conduct these policies. If I may now shift the focus to looking at the future and asking the question about how can economies adapt to the post-pandemic world? And in particular, how can we build forward better and stronger, as our managing director has emphasized? Here, what role can digitalization play in boosting this structural transformation, and in particular on enhancing financial intermediation? You know, Thailand and the Bank of Thailand especially have been very active on digital innovation. Can you share, please, the experience of the Bank of Thailand in these new, exciting areas?
Certainly. I guess my first point would be, I think that digitalization has a lot of potential, I think, to help out the economy. If we look at a lot of the long-standing weaknesses, structural weaknesses in Thailand, I think digitalization has the potential to help us in this regard. In terms of the real economy. Just for example, you know, one of the structural problems that we've been facing a long time is our inability to move as far up the value chain as we'd like, increase value added and whatnot. And if you think just, for example, in terms of some of the key sectors in the Thai economy, the areas where people think of Thailand as being relatively competitive, you know, two perhaps would immediately come to mind. One would be food. Another one would be tourism. And on food, I think digitalization, the potential to enhance traceability, I think it gives us the opportunity to perhaps move up the value chain in a more substantial manner than what we've been able to do previously. On tourism as well, you know, one thing I hope that we'll see from this work from home, work from anywhere kind of technology that's and way of working that's been giving a clear boost as a result of the COVID crisis is, you know, we hope that we'll be able to attract a different kind of tourism. And instead of trying to rely on the short-term, short-stay, not high-spending, you know, high numbers of tourists, we were able to attract, you know, higher spending, longer stay tourism in Thailand. Because I think, like I mentioned earlier, for us to be able to expect to go back to 40 million tourists, it's not going to happen anytime soon. So the alternative then is to try to get, you know, people that might want to, again, work from anywhere, you know, and Thailand is, you know, good place to work, good place to hang out. And we hope that digitalization, work from anywhere would be supportive of that. That's just an example of, I think, how digital technology can help us on the real economy side. But getting back to your question, and my apologies for digressing a bit too long on this, digitalization and what can it do in terms of the financial sector. And on that, again, I think the evidence is quite clear. It can do a lot, and it has done a lot for us. We've had a lot of pain points in the financial sector in Thailand, which digitalization has helped us to address. We've had significant issues in terms of less than stellar efficiency in the financial sector, as seen by high fees in a lot of areas. As seen by high net interest margins, high spreads. We've had and even more substantially issues with access and inclusion. And I think on those fronts, on both those pain points, digitalization has and can help us quite a bit. So just to give you an example of the kinds of things that we've been doing to address on the digital front and address some of these structural weaknesses in the financial sector. let me point out just two things that I think we've done a fairly decent job on. First is on the payments. We put in place a couple of years ago this thing called Prompt Pay, which is our national digital electronic payments system using standardized QR codes for payments. And we're happy to say that we were one of the first countries to do so. And that, I think, has had, I think, a tremendously salutary effect on improving access and inclusion, and the number of transactions using that system has grown steadily. It's obviously been given a huge boost during COVID as a result of people having to stay home and shopping online and whatnot. But just to give you an example of, I think, that to me that illustrates the potential for this in terms of improving inclusion and improving the policy response to the COVID crisis. The government undertook this as part of the fiscal stimulus measures that they did and the income support schemes that they undertook during the crisis. They undertook this thing called, in Thai it's called Konnakhlung, which means each of us pays half, I guess is the literal translation of that, half scheme. It's a co-payment scheme, basically, for given a certain limited amount of subsidies, and then people would use these for co-payment for small vendors, and that's the part that I really love and from this scheme, which is that we've seen small vendors, literally sidewalk market vendors, with on their stalls, or their little carts with their QR codes, and people use the half scheme using the QR codes and our payment schemes to do this. So again, I think that's an excellent illustration again of how using digital technology has improved inclusion, access to financial services, and facilitated government transfer policy. So it goes where it's really supposed to go. Because before that, we used to have these schemes where there were these subsidies, but again, it's for people to, you would spend them in the larger supermarket type places. And then again, in terms of incidents, nowhere near as good as making sure the payments go to the sidewalk vendors. And I think that, again, an illustration on that front. That prompt pay scheme that I mentioned to you is something that, again, it has applicability not just in terms of payments and, again, for in support of fiscal schemes and whatnot, but we've also rolled it out to on a cross-border basis. So we have now to try to improve cross-border payments. So if you're, in several neighboring countries, so for example, you're a tourist now, but your Thai person goes to Laos, they can pay for something using a QR code. So we've extended this scheme. We have now a cross-border linkage using this payment scheme with Laos, Cambodia, Vietnam, Japan, and we'll soon, at the end of next month, be doing it with Singapore. So on the one track that we've done to address our pain points in the financial sector has been on the payment system. I think we've done a pretty decent job on. The second area, which we've been undertaking developments on, is in developing proof of concepts, pilot projects on the central bank digital currency or CBDC side. And again, we feel that I think digital currencies are something that's going to come very strongly, and we feel that it's very important, I think, for the population to have the option of a digital currency that's provided by the central bank. So on that, back in several years ago in 2017, 2018, around then, we started off with a wholesale CBDC or central bank digital currency project involving other banks, so it was focused on interbanks. We subsequently rolled that out, a wholesale CBDC, to include a cross-border project, which we did in conjunction with the Hong Kong Monetary Authority, where we did a cross-border corridor using central bank digital currencies to help address the issue of cross-border payments, which has been a pain point because the fees are very, very high, and the use of the correspondent bank network is cumbersome, not transparent, and all that. So again, and that proof of concept, you managed to show that it worked quite well, and we're now expanding it to include other countries as well. So we're working next with the Central Bank of the UAE and the People's Bank of China with the involvement of the BIS. So that's happening in terms of the cross-border side. We've also expanded the wholesale CBDC proof of concept to include corporates. So there we're looking at different kinds of functionality in terms of like invoice financing and whatnot, and also have had positive results on that front. And for us, again, the next stage, which we're looking at in terms of CBDC, is to look at a proof of concept project on retail CBDC. Again, as I mentioned, I think that having that safe, accessible, secure, reliable option for people is important in the light, particularly in the light that we've seen again a lot of developments on the private front. Things are moving very, very quickly in terms of private digital currencies and stable coins and whatnot. And so we feel that it's important for us to keep abreast of the technology, develop the capability such that if and when it makes sense, that we're able to launch a retail CBDC and provide that safe, inclusive alternative for people to be able to access digital currencies.
Thank you, Governor. It sounds like there are a number of exciting developments on the digital front taking place in Thailand, from tourism to the financial system. And I think it's important for all of us to pay close attention and learn from these new developments. This has been a fascinating discussion, and we can go on easily for another hour, but I'm afraid that our time is up. On behalf of the IMF, let me express our deep gratitude to Governor Sethaput for sharing his time and rich insights into these complex issues, as well as the Bank of Thailand for their excellent support of the fund's work in these areas. Governor, Khop Khun Krab, thank you, and best wishes to all.